Welcome back to the deep dive. We're here to cut through all that noise and give you the insights that will really matter,
Yeah.
giving you that aha moment without the overload.
Exactly.
Today, we're digging into the latest financials from Central Depository Services, India Limited. You probably know them as CDSL.
Mm-hmm.
If you've ever bought shares or mutual funds in India, well, chances are you've dealt with them, even if you didn't realize it. They're kind of the invisible engine room of the Indian markets.
Indeed they are. And CDSL, it's unique, Asia's only listed depository for, over 25 years now. They've been a huge part of making the Indian capital markets digital, streamlined.
They work smoothly.
Right. Secure, convenient, and importantly, the same access for every investor. That's been their focus. Reliable services.
Okay, so our mission today. Let's plunge right into their Q1 FY26 results. We've got the press release, the investor presentation, the board meeting notes.
All the official stuff.
Yeah, exactly. We'll look at the numbers, the big operational moves, and, what it all actually means for you, whether you're investing, just watching the market, or maybe just curious about India's really booming financial scene.
Yeah, it's a fascinating space right now.
So is CDSL this unstoppable growth machine? Or is it maybe a bit more complex? Are there other things happening, maybe innovations, that give us the full picture? That's what we want to find out.
Let's do it.
Okay, let's start with the big picture then. The overall snapshot for Q1 FY26. Looking just at the standalone company, the headlines look pretty impressive, right? Growth, milestones?
Oh, absolutely. The press release, it definitely highlights strong performance for CDSL itself, the standalone entity.
Right.
Their total income jumped to 312 crore rupees. That's about, 37.5 million US dollars?
Wow.
Yeah, a big jump. 42% up from last year and 52% up just from the previous quarter.
52% quarter on quarter. That's huge.
It is. And the net profit, standalone again, also looks great. 152 crore rupees, so maybe $18.3 million US. That's up 44% year on year, and get this, 88% quarter on quarter.
88%. Okay, those numbers definitely catch your eye.
They do.
But I'm seeing something quite different when we look at the consolidated figures, when they include the subsidiaries.
Yep.
For our listeners, what's going on there? What did that difference really tell us? Is that like a warning sign?
That's a really crucial point, and it definitely paints a, let's say, more nuanced picture.
Okay.
So while standalone was, very strong, the consolidated numbers tell a different story. Consolidated total income for Q1 was 295 crore rupees. Growth, yes, but much more modest. Only 3% year on year, 15% quarter on quarter.
Only 3% year on year, compared to 42 standalone.
Exactly. And here's the bigger thing. Consolidated net profit. That was 102 crore rupees. Now, that's actually down 24% compared to last year.
Down 24%.
Yeah, a decline year on year. It was up slightly, about 2% compared to the previous quarter, but that year-on-year drop is significant.
Okay, so understanding that gap, strong standalone, weaker consolidated, that's key for today.
Absolutely central to our deep dive, I think.
All right, let's shift gears slightly. This next bit is, it's genuinely fascinating if you're watching India's growth story, the demat accounts. CDSL hit a massive milestone this quarter. Tell us about the scale of this.
This is really a standout achievement, no doubt about it, for CDSL and, frankly, for the whole Indian market. As of the end of June 2025, CDSL became the first depository ever to cross 158 million demat accounts.
158 million.
That's 15.86 crore accounts, just huge. And get this, in Q1 alone, just those 3 months,
Yeah.
they added over 5.6 million new accounts.
56 lakh.
5.6 million in one quarter.
Yeah. I mean, think about it. That's almost like adding the entire population of, say, Denmark or Finland in 3 months. Joining the Indian stock market via CDSL. The scale is, it's mind-boggling. Wow. That really hits home just how central CDSL is to this whole market expansion in India.
Yeah.
Okay, beyond just the number of accounts, huge as it is, how does that actually translate into, value, revenue for CDSL? What is a signal for their future?
Well, it translates pretty directly. More accounts mean more securities being held. Their demat custody value, so the total value of securities in those accounts, hit, let me check the number, 39,609 lakh crores.
Which is roughly?
That's about 4.77 trillion US dollars.
Trillion. with a T.
With a T, yeah. And that's up considerably and from about $3 trillion the year before.
So,
They also saw more companies, more issuers using their services. Over 105,000 now, up from around 79,000 last year.
so more activity, more fees.
Exactly. It shows their footprint growing across the whole ecosystem. People trust them. And yeah, it directly impacts their fee, income transaction charges, custody fees. It really underlines their role as the market scales up.
Right, that growth is undeniable. But let's try and connect that operational success back to the financials we started with. We had that impressive standalone profit, right? But the consolidated picture was much softer. So how do we square that? What was really driving that strong standalone number specifically?
Okay, this is where we find a really important piece of the puzzle. That standalone profit, the 152 crore rupees, it was strong, yes, but a very significant chunk of it.
Yeah.
62 crore rupees actually came from a one-off dividend payment. They received it from one of their subsidiaries.
A dividend, okay. How does that compare to usual?
Well, in the same quarter last year, Q1 FY25, that dividend income was zero, nil.
So it's not a regular thing.
Exactly. So it means their underlying operational profit, without that extra income boost, might not have grown quite so dramatically. It raises a question about how sustainable that specific profit level is quarter after quarter.
Right, that context is crucial.
That said, their standalone EBITDA, which is a measure of operational performance, that did see healthy growth. It reached 244 crore last year. So operationally, still good growth.
Okay, and the standalone EPS?
Standalone earnings per share came in at 7 rupees 27 paise.
Got it. So that big dividend explains a lot about the standalone surge. Thanks. That clarifies things.
Okay.
So then let's flip back to the consolidated side. The profit there actually fell year on year despite all this account growth. What pulled those consolidated numbers down?
Right. Connecting it to the bigger picture, that consolidated net profit, 102 crore rupees, it was definitely dragged down by losses in some of the group companies.
Okay, which ones?
Well, the auditor's report, it specifically points out a couple of things. It says the consolidated results include a net loss of about 34 lakh rupees. That's roughly $41,000 US from a subsidiary they didn't name.
Okay.
And also their share of a net loss, about 37 lakh rupees or 44,500 US from an associate company called India International Bullion Holding IFSC Limited.
Right. So those losses offset the main business's profit.
Pretty much. That's why even with the strong standalone result and the massive demat growth, the overall consolidated profit actually went down compared to last year.
Makes sense now. And the consolidated EPS?
Consolidated EPS for the quarter was 4 rupees 90 paise.
Okay. And did they break it down by business segment?
They did, and it shows, their main depository business and their data entry segment were profitable. But interestingly, their repository segment,
Repository, what's that mainly?
that primarily deals with holding insurance policies electronically. That segment actually reported a loss this quarter, about 1.77 crore rupees, or around $213,000 US.
Okay. So some parts of the group aren't firing on all cylinders yet.
Seems that way, yeah. A bit of a mixed bag in the subsidiaries.
All right. So looking beyond just the financials, CDSL isn't just about processing transactions, right? They're also a big driver of innovation in the Indian markets.
Absolutely.
What new things did they roll out in Q1? And what's the bigger strategy behind these moves?
Yeah, this really speaks to their forward-looking approach. They launched several pretty significant digital initiatives just in 2025, and many were actually kicked off by the SEBI chairman, which kind of underlines how important they are for the market.
Okay, like what?
Well, one key thing is the introduction of direct payout of securities directly into investors' demat accounts.
So cutting out steps, making it faster?
Exactly. Simplifies things, speeds up transactions. It's a direct benefit for millions of investors.
Nice. What else?
They also launched proxy advisor recommendations right inside the e-voting system on their investor app.
Oh, interesting. So helping people vote on company matters.
Precisely. Giving them expert-backed guidance to help make, more informed decisions on shareholder votes.
That sounds genuinely useful. Streamlining voting, adding education.
Yeah.
That's quite impactful.
It is.
But with all this rapid growth, new features, are there potential risks? Like operational hiccups? Or is it all smooth sailing for empowering investors?
Well, they seem very focused on managing that growth and risk through access and education.
How so?
For one, they massively expanded their investor education. They launched the CDSL IPF investor education website now in 12 different languages.
12 languages. Wow, that's huge for inclusivity in a country like India.
It really is. A big step for financial literacy. And then there's their new investor app. It now has unified features.
Unified how?
It lets investors, the beneficial owners, monitor their open positions, their margin positions across different exchanges and clearinghouses. And crucially,
Yes.
it gives you a consolidated view of your securities across both depositories, CDSL, and the other one, NSDL, all in one place.
Oh, that's huge. No more logging into multiple platforms.
Exactly, a massive convenience. So all these initiatives, they really tie into their goal of, wider participation, empowering what they call the Atmanirbhar Niveshak.
The self-reliant investor.
To self-reliant investor, yeah. And they keep using new tech, too, like distributed ledger technology or blockchain for various services. So they're definitely trying to stay ahead of the curve.
Okay. Now, CDSL isn't an island, right? It's got subsidiaries, partners.
Yeah.
It's part of a bigger ecosystem.
Definitely.
How are those other pieces doing? And given how critical their role is, how do they handle things like regulatory compliance?
Yeah, the group companies are important. There's CDSL Ventures Limited, or CVL. It's wholly owned. It's actually India's first and biggest KYC registration agency.
KYC, know your customer.
Right. They handle over 90 million KYC records. Plus, they do registrar and share transfer agent services for thousands of companies. And things like Aadhaar-based eKYC and eSign, sort of a digital identity backbone.
Okay, crucial plumbing.
Very much so. Then there's Centrico Insurance Repository Limited. CRL, CDSL owns about 52%. They're approved by the insurance regulator, IRDAI. They partner with 45 insurers, Life, Health, General, and hold over 1.8 million policies electronically.
But that's the segment that reported a loss this quarter, right?
That's the one, yes. The repository segment we mentioned earlier, worth remembering.
Okay. And any others?
There's also Countrywide Commodity Repository Limited, CCRL. CDSL has about a 54% stake. They handle electronic warehouse receipts for commodities, so extending that digital infrastructure into the commodity market as well.
So it sounds like a pretty diverse group, each playing a specific role in digitizing different parts of finance.
That's a good way to put it.
And what about compliance? Any red flags? Any major legal or regulatory things happening this quarter that investors should know about?
Well, on the financial reporting side, things look clean. Their auditors, S.R. Batley Boy & Co., LLP, gave an unmodified audit opinion on the results.
Which means?
For investors, that's basically a clean bill of health. It means the financials are sound, no major issues found in the audit.
Good to know. Any legal issues?
They did mention one ongoing case. It involves a company called Anugrah Stock and Broking, which was a depository participant, a DP, that CDSL terminated.
Okay.
There was an arbitration award against CDSL alleging they were negligent regarding misuse of client securities by Anugrah, but CDSL is fighting it. They've challenged the award in the Bombay High Court.
And what do they think will happen?
Management seems confident. They believe they have a strong case and expect the court to overturn the award, so they haven't made any provision for it in these Q1 results.
Okay. Something to keep an eye on, but they seem confident.
Yeah, and it reflects their general approach, proactive on compliance, investor safety. They also highlighted some recent awards they won, like for innovation in market infrastructure and best proactive threat detection and cybersecurity.
Right, reinforcing that image of stability and security.
Exactly, which is critical for their role.
Okay, so as we kind of wrap up this deep dive into CDSL's Q1 FY26, what's the main takeaway for you? What really stands out when you connect all these different threads for our listeners?
Well, I think what's really fascinating is that tale of two performances we talked about.
Right.
You have this very strong standalone growth, but you need to remember it was significantly boosted by that one-off dividend income.
Yeah, the non-recurring bit.
Exactly. And then you contrast that with the more muted consolidated picture, which was clearly affected by losses in some of the subsidiaries and associates. But looking beyond just the quarterly profit numbers, the really powerful underlying trend is that consistent, even accelerating growth in demat accounts.
Can't argue with 5.6 million in a quarter.
You really can't. And that, coupled with all these new digital initiatives, the direct payouts, the investor app upgrades, the proxy advice, it just underscores CDSL's commitment. They're not just sitting back, they're actively expanding and modernizing India's whole capital market infrastructure.
Yeah.
They're clearly not just riding India's growth wave, they're actually helping build the surfboard, a key enabler.
It really seems clear they aren't just reacting to trends, they're actively shaping them. Pushing innovation, empowering investors, fundamentally changing how millions of people access the markets now. It really makes you wonder, doesn't it? Given how absolutely critical they are as market infrastructure and this relentless drive for digital transformation, how might their ongoing efforts, democratizing access, simplifying things for investors, how might that amplify their influence even further? Could it reshape the whole landscape of capital markets in India? And maybe even become a model for other emerging economies?
That's the big question, isn't it? Their potential impact goes well beyond just their own bottom line. It's about the future shape of the market itself.